Kelly, welcome. Our slide says State of the Union. There's no better man that I know than you.
Thank you.
He's like, what's amazing about Kelly is so humble, too. He's so smart. Have you set him up about what,
Yep, he is set up and ready to go, and I told him you were going to conduct it like an interview.
Well, but I want you to I'll kind of set it up, Kelly, but, everything's shutting down. No one's dying at this moment. So, talk candidly, the politics of it, the shutdown of the economy. What I really want to get to for the room and just for the content, because no one's talking about it, is what do people do now, right? And we'll kind of do it in stages, but that by the end, we got different people saying, do you buy now? Do you hold? Do you get in cash? Get ready for opportunities? I think the fallout of just the little bit of shutdowns that are going on, it's going to take a little while to recover. So I'll let you go. Talk from the macroeconomics to the daily, what do folks do?
Okay. I'm getting a lot of feedback, so I'm hoping I can do this where I have to actually talk over myself.
Are you on speaker or Bluetooth?
I am on a Bluetooth. I'm going to take that off. Hold on.
Try to take that out.
Yep.
Is that better?
Let's try this. How's this?
Oh, way better.
That actually helps me a little bit.
All right.
Good. Actually, now I can't hear myself talking double, so I think it's good. Can you hear me?
Yep.
We can hear you.
Good. I think your question was, it was along the lines of what's going on now? Should we buy now? Is this something we should be afraid of? It was along those lines.
It was along those lines, but even go back further. It's not just the viruses causing this.
Okay, yeah, you're right. Okay, let me discuss this a little bit. When everybody earlier today, Loral told me they would probably put me on the phone for an interview and do a podcast on something like this. And as the day came through, and we have settled down 10% in a day on both the Dow and the NASDAQ and all the major indices. This, just so everybody knows, this is what a crash is. This is a crash. This is a time that I've seen historically, maybe 5 times in my life, since I've been old enough to recognize what they are. 87 crash, the 91 Gulf War, 98 Russian ruble, 2000 tech bubble, 2008 financial crisis, to smaller, tiny extents, corrections like Brexit in 2016. But more importantly, in this particular case, I want everybody to know that this is a market crash. But it's occurring for reasons that we have never seen before. This is a crash that is inspired by something that threatens our health. And it's not just the supply lines. It's not the ramifications politically. It's something that is inspiring people to have a great deal of fear. And we all should have fear right now. However, generally inside of fear, there's a lot of opportunity. But you can't see it because you're afraid. And that's something we all know to be true. We all know that in our moments of fear and anxiety, that we just can't act. We just can't do anything. We're paralyzed. We're numb. It's like somebody's just given you a bad piece of information that affects you personally. And in this case, it is personal, right? Because we're talking about a pandemic, something that came out of left field really no more than 5 weeks ago. And as a result, we have seen worldwide markets move down, as of today, 30% over the last 2 weeks, actually the last 13 trading days. This, in my career, I've seen this before only in the 87 crash. And at that time, I was just 27 years old. So I think I was 27. And so when I saw that, I didn't realize what to make of it. I worked in the Wall Street. I was actually at Salomon Brothers at the time, and I remember the response that came out. It wasn't from the government itself; it was from the Federal Reserve, and they us they mitigated fear by lowering interest rates like 100 basis points in one day. Today, that didn't lift the market that day. Just the same as the Federal Reserve came in today and offered over the next couple of days, they're going to put in $1.5 trillion of capital into the markets. And that didn't do anything to the market. It closed on its absolute lows. It means that people are selling all equities. They don't feel that anything has value. Apple no longer has a value. Nobody will use their MasterCard, so you might as well sell MasterCard and Visa. When you see this kind of behavior, you all have to have understanding that this is a time when enormous opportunity exists because of the great deal of fear. The virus has done something that has literally made us all feel sick in one way or another, even if we don't have the virus. So it is a unique thing, but at the same time, I can tell you what we're all seeing here is actually, in many ways, an opportunity of a lifetime. And it means that if those of you who have cash will be able to find some stocks, and there's many of them, that you will be able to buy when we emerge from this, which will be months. This isn't something that's going to come back in next month or even over the next 3 months or 4. This is having a disruptive effect on the economies of the world. There will be a bounce at some point, and there will be more volatility. But I can tell you that the world will go on, markets will go up, and they will recover from all of this. And I can tell you this, I've never seen a greater level of fear except for the 2008 financial crisis. The 87 thing happened so fast it didn't even matter, but because it just happened and it was over, people didn't even realize that it happened. There wasn't the exposure to the markets at that time as there is today. And so any of you out there that have investments in the stock market or 401ks, you will have been hurt, but know there is a tomorrow and it will recover. On the other hand, for us, we do things differently for our product. So we have a different take on this. But I just want to make sure that everybody in the room understands that the markets will probably continue to go down, but you do need to understand that selling right now is probably not a good idea, even if it moves down another 10% tomorrow, because it's not worth it, because we don't know when the governments of the world will unite and solve this problem in such a way that the market will rebound in such a way that you would have probably sold lows. That is what happened in the 2008 financial crisis. And that's why so many people took 12 years to get out. And they went out during that time and they never, ever fully recovered. And the taste in their mouth of the stock market is what it is right now, one of disdain. You just hate it. You hate being in the market at times like this. There is better ways, but that's the end of my long answer to the virus. I do feel that this sell-off is mostly due to the virus, and to a lesser extent, the things that could possibly change politically as a result of this.
So, Kelly, when you say they dropped over what you said, $1 trillion?
Yeah, the government.
So when they dropped it into the market, talk through that. So those who aren't market savvy, mean literally into. When you say into the markets, explain that further.
Okay. What's happening is when the markets move down, governments around the world do things to protect it. So the first thing they do is the central banks of the world, the European Central Bank, ECB, in our case, the Federal Reserve, they inject liquidity. It means just basically buy securities. They buy their own treasuries. And when they buy the treasury back, what they're doing is they're giving the banks and saying, hey, I want those treasuries back. And these treasuries mean that the government pays for them and puts cash into the system. So now all of a sudden, the banks that hold all of these treasuries, which is the lion's share of treasuries around the world, they are forced to sell them to the government, and the government gives the banks cash. If the banks have all this extra cash, it means there's no run on the bank. If a person wants their money out of the bank, they can get it. And that gives reassurance that there won't be any liquidity problems for businesses, for loans, and things like that that keep the economy rolling so that people can still have their jobs and people can produce things. So that's the first step. The second step is what's coming, hopefully, from our government, if they can agree, to do something from the federal government side. So what the federal government will probably do to fix this, and this is very meaningful, is they will delay taking Social Security and withholding tax from anybody's paycheck. And by doing that, obviously, everybody has more cash every week or every time they get paid. And moreover, what they will do, get probably on landlords and tell people that have property that, hey, if you have a business, did you lose me?
Yeah, we lost you. Come back. Come back.
Okay. Hello, I'm there.
We're good.
Okay, good. And so the government, at the end of the day, is going to do things to protect the economy and jobs. So those are the first moves. But frankly, it takes time for these things to work out, but they're too powerful to keep the market down forever. So if anybody is selling stocks, they're selling them against liquidity, the federal government, and the central banks of the world, which want them to go up. And there's no way to stop the governments and central banks from moving the markets the way they want, which means you have to kind of stay in. It's awful. It's absolutely horrendous. This is why people hate the stock market. But at the same time, this is exactly the time when you really just need to close your eyes on it. And not, if you have a 401k or an investment, it's probably very wise to hold it.
And so we've also heard, I'm just going to kind of, and anybody have questions, I'll walk around with the mic. So negative interest rates.
They're coming.
So explain what that's going to do to folks. They're going to be basically paying the bank?
No, that's not going to. We're going to go to zero interest rates from the Fed, which means federal funds will be zero. It won't be negative, but it's possible we could go to a negative interest rate. A negative interest rate isn't really that bad, in a way. But it is bad to people that are elderly and want to be on fixed income. So, for example, what do you invest in if you're older? You're not supposed to be in the stock market. So you need to find investments that give you a yield on your retirement. So a lot of to save the stock market, it actually ends up hurting the elderly. And that's the bad news. But the good news is that when stocks become cheap, even though they're going to get cheaper, most of these stock markets, especially most of these companies that offer dividends, will probably continue to offer their dividends, maybe smaller, but you have two advantages. One, you do have a higher yield on the dividend, and at the same time, you have the ability to have price appreciation on the asset. But the negative interest rate portion is really caused when there's a demand problem. So what's happening when you see things like this is it's called demand destruction. He's doing things they won't buy. They buy the necessities. That's why we've heard of these things where toilet paper is running out at the Costco. So people buy what they need. That's why gas prices are going down. If they don't want to travel, they're not going to need gas. The airlines are going to be shut down. This, which is unprecedented, but it means, for example, that spending is just out because the people are afraid, as they should be, of getting the virus. But here's the risk of selling. At the end of the day, the minds of this world will beat the virus. I'm sure we all would agree with that. We're not going to turn into zombies. We will beat it. It's just a matter of time. So the first thing that comes out is good news that says that we have a chance of beating the virus, the market will rally in a large way. I think here's something I think everybody should pay attention to. I'm going to pay attention to this. I think everybody might have heard last night that Tom Hanks and his wife got the virus in Australia. I love Tom Hanks, great actor. But everybody in the world actually kind of knows him. He's 63 years old. If he recovers from this, everybody will know what's happening to him. If he recovers from this, it'll show the world, the whole world, that it is beatable. You'll get sick, and you will get through this. He is a diabetic, but I mean he has any respiratory problems. So it means that as you see something like this 30 days from now, and if he's diagnosed well, you'll see the market rally, and it would rally monstrously. So this is actually it's bad for Tom Hanks, but it is a worldwide symbol that can be used. This is what I used to do. You look for some symbol that will represent the direction of the markets in the future. They need to see that this virus is just that. It's a virus. You're going to get sick and you'll cough. But the overall likelihood is you're going to survive. Doesn't take away the fear, but here's a case where we get to actually see it. We're going to watch it, sadly, through Tom Hanks's health. So I think it's really important for everybody to pay attention to this. So if they have money in the market, you want to look for something that gives you a sign, hey, this is beatable and people are overreacting. But right now, there's just fear. And that's it. It's fear. And when fear runs amok, then this is what happens.
So according to, just again, to someone in the room who heard about it, I've heard it from others, that there's a, vaccine just out. But it's really the flu. I mean, what statistics have you heard about people really dying outside of the elderly or sick?
The statistics are all over the place, right? Italy has 10% people are dying, and they have 10,000 people have it, and 1,000 people have already died. 10%, that's huge. South Korea, 0.2%. And by the way, you can trust the numbers out of South Korea. It's an extremely developed country. So we don't really know the numbers, and that's another thing that makes it scary. Because if we can't trust what we're hearing, we don't know. And if we don't know, then we fear it. We always fear, like children do, what we can't understand. And so here's a case where the statistics are all over the place. The general statistics that are significant seem to be somewhere around 1.5%. if you tally all the different countries, which is actually very bad. So it is a bad virus. But the other thing is, or the older people in the room, which would include me, we are the ones more likely to have problems. So if you're older, you definitely have to pay attention. This is nothing you haven't heard, but it's because I'm not a doctor, but we do have to become and learn as much as we can in order to be able to manage this in our minds. I've invested in the market my entire life. I'm not a prognosticator. I'm a statistician. I look at the statistics of things. And statistically, I can tell you that the markets are extended in such a way that in our case, if you know anything about what we do, we have a strong probability of a buy signal on Monday. So, which means we would be buying the S&P 500. So the statistics and mathematics don't understand the coronavirus. They just know statistically it's a great bet.
What's going to happen to the real estate market?
The real estate market, my thoughts. I think the real estate market will, I actually think it'll have to slow down a little bit here. But again, with lower rates, all that means is that financing will be easier. So refinancing will become more prevalent. But that doesn't mean that you rush off into the real estate market and look for things there. There's a lot of risks in owning real estate right now as associated with this. They just haven't been felt yet. The stock market reacts first because it's highly liquid. The real estate market could have problems as well because nobody's going to move. So just renting an apartment building or a complex or buying a house that you can use as a rental or a flip carries with it a chance that the demand will be gone. Again, people are not buying things, so why would they buy that next flip or move their apartment? So I'm not in love with that either at the moment. But with interest rates being low, probably 3 to 6 months from now would be a good time to start reconsidering real estate investment.
Questions? Joel?
I hear that large corporations are buying back their own stocks, and that's hyperinflated the stock market. And this is something that has happened and precluded the depression.
Was the question about repurchases?
Yeah, repurchasing their own stock.
Yeah. Instinctively, I would think, is there more to it? More to that question?
Nope, that's good.
Okay. Instinctively, if I'm a company right now, I would probably stop my repurchase agreement currently. Why? Because I got to know I'm going to have cash. People repurchase their stocks when they can't find anything else to buy. And so therefore say, hey, the best thing to buy is my own stock. But in this case, you don't know what your cash position is going to look like 3 or 4 months from now. So you want to preserve your cash. My instinct is they would actually stop, even though the prices are better, much better for them to do it. The difference is there's different opportunities now. And so maybe these companies would, instead of buying back their own stock, maybe if they had suppliers that they used all the time, they may be saying, hey, instead of buying my own stock, I'll buy one of my supply chain companies that I need. So I think repurchasing of stock is probably going to slow for fear of losing your cash. And then afterwards, they will probably reevaluate because the asset prices have all been changed as to whether or not there's something better to buy than their own stock.
So what do they do now? Get to cash and wait?
Yeah, you have to go to cash. Our company is 90% cash right now. We do some fluctuating depending on what people have in their portfolios over here, that are looking to buy dips and try to sell the first rally they see. But yes, you don't buy now. You need to see something meaningful that is a defendable price to buy. So, for example, AT&T pays about a 5.6% dividend. It's closed today, I think, around $32 a share. This came off of $39 a share.
We missed all that.
AT&T, I think, closed at $30.84 a share. That means that the dividend is more around 8%. ExxonMobil is about 10%. But these are going to cut their dividends. But it's still worth it to buy it, even if they cut their dividends. These are stocks that have come off 30%. AT&T has been in a range most of my lifetime that you buy it at 30. So, because you don't see it here, except periodically. So, my instinct is the best thing to do might be to go after some dividend yielding stocks. They're super cheap. They're offering high dividends with the full expectation that the dividends will be cut. But it doesn't matter. If they cut the dividend, they have more cash. The price of the stock should go back up. And then subsequently, they would start to reissue the dividend.
Questions? Anybody else? Interesting? Yes, Garrett, one more. What are your thoughts on cryptocurrency?
I think that's a real good question, actually. You notice, I don't know if anybody noticed, but cryptocurrency crashed 30% the other day.
It all did.
So what it's saying is that in a world where things seem to go into complete fear, cryptocurrencies are not a safe haven at all. Cryptocurrencies are a safe haven when the general currency markets are under pressure. Remember, that was created in the 2008 financial crisis because the banks were over leveraged, and people at that time couldn't trust if your dollar was going to be worth $1 or your euro would be worth €1. So why don't we have our own currency? It was created out of that. I do think cryptocurrency will be a good value. To have a part of your portfolio should be in crypto. Very small portion, at least 5% at the most, should be in crypto. But right now, no.
All right. Why did the crypto crash? Any idea?
Yeah, because when it's the same reason the stocks are crashing. When people are afraid, they sell everything, even if it's good. It doesn't matter. You just sell anything to raise cash. And it's when people behave irrationally. But it's very rational at the time. Only historically can you look back and say, oh, I shouldn't have done that. But you can't blame yourself, because when you see things like this, it's legitimate to be frightened. So you need cash. You don't care about everything. You think the world is changing in a fundamental way. Maybe there's a paradigm shift. So they sell just everything. It's the saying of throwing the baby out with the baby out with the baby water. It's one of the things I can tell you is that right now the world is consumed with fear. It's when I was a kid, I remember taking my American history class, and in it they talked about FDR's fireside chats. And if his fireside chat had something we've all heard, the only thing we have to fear is fear itself. And the fear itself at the time was the Great Depression. Yep. Nobody had a job. That's scary. This one is about our personal health and the people we care about. That's what makes this different. And it's a very personal fear. So it's the only reason I think I can talk a little bit about these kind of things and my memory of them is because I did spend a lifetime as a trader and a portfolio manager, actually a risk manager. And when I did that, you see these things periodically. And we just happen to be in one now. And every one of them was scary. And every one of them was a new thing. It was new then, too. The financial crisis was new. 87 was new. Russian ruble was new. And so there's always something new that the market has never anticipated before. But I can tell you this, at the end of the day, I caution everybody, this really will end, I think 6 months from now. Everybody in that room, if you were to buy AT&T at $31 a share, I think you'd be very happy 6 months from now. And I think we all know that company. We know what it is. We know what it does. You may like it or hate it, but it's not going away. It'll be there. And the governments of the world just won't let our humanity fail in such a way. If it does fail, then obviously we know that we should buy water, guns, and skip on butter. So it's a really strange world right now, but it's tolerable. We will get through it. It's just having to manage your own fear.
Kelly, we appreciate you. Thank you so much. I will see and talk to you very soon. And those of you that are out, because we are doing some social media, Randy, you want to put up a link? So if you want to go to iFlip, you'll show it how to do them all? Okay.
Yeah, we got it.
Yeah. So we're the software we're talking about. Stay tuned. Actually, I'll keep recording, and we'll put it straight out. And you'll
all
show
the
them
best
the
to
link.
all of you. Thank you so much.
Thank you, Kelly. Give him a hand.
All the very best.